I want to talk about 5 lessons that hopefully you've taken away from the past couple of years of investing. 2022 has not been the greatest year when it comes to the stock market and the returns, especially if you've been heavily focused in growth. I'm going to start off by saying this isn't to, point fingers and say, oh, you suck at investing. I mean, I've also lost money, right? Everyone in this environment is most likely losing money. If you are outperforming in 2022 or have a positive return, fantastic job. Whatever you're doing, you're killing it. For those that aren't beginners but are more intermediate, some of these points you probably already know about. Maybe this is more of a therapy session for you. The first thing that I want to talk about is the hype that we saw in 2020, 2021, and how that's really played out over the years. And I think it's easy to get sucked up into the hype as a newer investor because in the media, people like to flash, hey, I'm making easy money. If you're not making a ton of money right now, you kind of look like an idiot. So people easily get sucked into that. Unfortunately, with the hype is yes, you can make a lot of money in the short term and everyone kind of looks like a genius. But it's one of those things where if you give it enough time, valuations matter. So valuations, the multiples that some of these companies were trading at in 2021, hindsight's 2020. But when you're in the moment, I mean, I felt myself even having FOMO. I think it's just natural for everyone to feel it when multiples are crazy high, but the stocks keep on going up even further. You're like, what's going on? What am I missing? I feel like an idiot. And so you take some positions that are a little bit more speculative and you get absolutely annihilated the longer that those positions last. Point number 2 is kind of to piggyback off of point 1 is taking profits is okay. I think I made this mistake as well with companies like Square, PayPal. They did become a bigger percentage of my portfolio. And I remember even talking about it in live streams or just mentioning it saying, wow, Square, PayPal, like I would not invest in these companies right now because the multiples are really high on these companies and they look kind of overvalued. Me saying that out loud, but not adjusting my portfolio, I look back and think, what am I saying when I'm saying there's definitely a premium in these names, but I'm just not going to buy the stocks? If there's a situation where you're actually saying out loud, wow, there looks to be a premium built in, or the one rule when it comes to trading or investing, if you take a screenshot of an investment and send it to your friend, that's usually the telltale sign that you should be selling that position or at least trimming. I don't think it makes sense maybe to sell everything, sell 100% on my Square, sell 100% on PayPal, but trimming is a way to kind of take some money off the table. Point number 3 is all about holding on to losers out of spite. And I've seen this a lot with names that have fallen 50, 60, 70, 80%. And the problem is the further that these companies fall, the bigger bounce back you need in order to break even. And it's one of those situations where looking at the previous price and anchoring to that price is very dangerous as an investor because stocks don't remember their past, they're only future looking. So looking at a previous price and saying, oh, well, eventually maybe it'll bounce back is a terrible investing strategy. Something else that is good to think about is it's easier to beat the overall market in the short term, a year, a couple months. But when you expand that timeline over 30 years is when it becomes much harder and difficult to beat the market. That's one thing that I would say if you are beating the market, try not to get a huge head. And if maybe you're underperforming the market, don't try to get too down on yourself because there can be swings. And I think it's important to measure yourself on a longer timeline before completely judging yourself. 5 to 10 years to see how is your actual performance versus the market. 1 year, it's just not enough time to really tell the long-term performance. The last and final point I want to talk about is playing mini fund manager. And I think it's important to think about this in a realistic way. For me, investing, researching individual companies, trying to create this portfolio that's beating the market is a game. In a way, entertainment, right? And hopefully you're not losing 90% of your portfolio and really underperforming. And the hope is that you are able to outperform. But at the same time, I also invest in index funds within my 401k, Roth IRA, my traditional IRA. So I have all these other accounts that I am playing the boring game of just investing in index funds. And then I have this portfolio that I'm trying to beat the market, have alpha. You don't don't have to go all in one or the other. You can kind of play a mix. I think the thing about investing in individual stocks is it can scare you away from investing in the market as a whole. People lose money, they get afraid of the market, they think it's a scam, they think it's a giant casino. And that's the one takeaway that I want newer investors to think about. Just because maybe you lost some money on an individual position doesn't mean that you should give up investing in the stock market as a whole, because there are products that it's very passive, you invested in them and it will perform as well as the overall stock market, which if you give it enough time, 20 years, the average return based on previous results, 8 to 10% per year. I wanted to make this video because I know right now the markets are getting destroyed. Growth names have been absolutely demolished this year in 2022. Trying to think of the positives, even though it sucks losing money. No one enjoys losing money unless you're a psychopath. It's always good to think about your emotions when it comes to investing. It's hard to resist our lizard brains. It's interesting because when I create content for investing, it's usually the opposite. So when there's hype, people want to jump on the hype, and when things are bad, people want to sell fear. But then again, I like to think that I'm a little bit more real, and I try to ignore the hype or the fear and just try to think without my emotions affecting me. This video, more of just talking to the camera, no crazy editing or anything. If you did enjoy this video, hit that like button, consider subscribing to Main Street Wolf. We talk investing, anything to do with money. Thanks guys for watching, and have a great day.